Welcome to the 3 Edge Week in Review for the week of May 27th. I'm Fritz Folts, the Chief Investment Strategist here at 3 Edge. And joining me here once again today is Steve Cucchiaro, CEO and Chief Investment Officer here at 3 Edge Asset Management. Today, Steve and I will be discussing the recent rally in hard assets and commodities in particular, which is now spread beyond just gold. We'll look at what hard assets are rising, what may be driving the rally, and how investors might consider positioning their portfolios for this environment. First, a brief look at the activity in the markets this week. Beginning on Thursday, obviously an historic day in American history, Donald Trump was found guilty of falsifying business records, the first U.S. president or former U.S. president to be convicted of crimes. The sentencing is scheduled for July 11th. Now, as we've seen many times in the past, political issues can often be white hot in terms of the news cycle, but oftentimes they don't turn out to have too much of an impact on the markets. But, of course, the guilty verdict does potentially create at least additional uncertainty around the upcoming November election. Another highlight for the week was on Friday when the Bureau of Economic Analysis released their report on inflation, with a report called the Personal Consumption Expenditures Price Index, otherwise known as the PCE. And this inflation report is the one that's most closely watched by the Fed, and so it's also the inflation report most closely followed by investors. And the report on Friday, the PCE and the core PCE numbers, which strip out food and energy, they came in just right about spot on the consensus estimate from Wall Street economists. And recently, when the reports have been in line with consensus, it was generally rather positive for stocks. We shall see if that will be the case this time. So now let's move on to today's topic. Let me bring Steve into the conversation. So Steve, investors obviously have been focused on the stock market and seeking to handicap when the Fed is going to be in a position to begin to lower rates. So, but somewhat under the radar, there's been a rather strong rally in hard assets across the commodities complex, including precious metals beyond just gold, such as aluminum and copper. But perhaps you could fill out the picture for us and, get into a little more detail or what specific hard assets are actually rallying here.
Well, Fritz, I think you're right to put a spotlight on hard assets like gold, like other commodities. And just to give a sense of what's been happening this year, as you say, under the radar, I'll start with crude oil. Crude oil is up around 6% this year. That's only over a 5-month period. Annualized, that's like a 15% annualized gain. Wheat, for just the 5 months, is up 9%. Gold is up over 14%. Copper, as you talked about, is up over 20%. Coffee is up over 24%. Silver up over 30%. Cocoa up over 100% year to date. So it's not just one isolated case of one commodity or hard asset. It's really across the board. And I think this bears some further watching.
Excellent. So now I think it's interesting if you could describe some of the reasons why you think commodities have rallied here. And if I go back to my example of copper as a commodity that's risen dramatically, I think one might say, well, that shows that that augurs well for the strength of the economy because copper is widely used in manufacturing and will play a role in energy transitioning, et cetera. But maybe there's more to it than just that. Could you maybe shed some light on the rallying commodities and why might we be seeing this rally?
Well, if you think about it, since 2009, which was the last big recession that we had, equities have been in a long bull market. Commodities have been in a long bear market until recently. And when an asset class like commodities are in a long bear market, there's a disincentive to invest in new productive capacity. And so you have supply constraints that build up over a long period of time. And you can't just turn that back on a dime. With commodity production, it takes years to bring back plants or to open up a new mine, et cetera. So whenever you have an economy that maybe not is gangbusters, but is growing more strongly than expected, coupled with supply constraints on the commodities, you get rising commodity prices. And this has been happening, like you say, under the radar recently. Let me just also point gold is a hard asset. And there are some other factors that are affecting gold beyond just the supply constraints. And we have countries like China that fear that the U.S. is going to impose dollar-based sanctions. So they are nervous about holding too many U.S. bonds and other forms of U.S. paper currency, and they've been swapping their U.S. currency for gold. Gold is also a safe haven when geopolitical conflict escalates, and there's certainly the prospect of that continuing. Longer term, there's a worry that the Fed is going to be under a lot of pressure to help the government, help bail out the government. As the government is dealing with bigger and bigger deficits, they seem to be accelerating. And so the government has to issue lots and lots of bonds, and that could force interest rates to go higher. And so there's going to be pressure in the future against the Fed to print money again to buy those bonds. That could be bullish for gold. And then finally, we have certain political advisors of some of our candidates that are advocating a weaker dollar, and that could start a currency war, and that would be very bullish for gold as well.
Excellent. So, as always, my final question is, how might investors think about positioning their portfolios in the midst of this recent rally in hard assets?
So what we've noticed, looking at typical investor portfolios outside of Three Edge, let's say, is that many portfolios seem to exhibit the traditional 60% equities, 40% bonds. That's a lot of bonds. And that worked well during the bull market in bonds, but that ended in the summer of 2020. Ever since then, bonds have been in a bear market, and they've served as a poor hedge against equity declines, or as a poor complement. Hard assets like gold and commodities have worked very nicely since then, and yet many investors hold very little to no hard assets. So our first recommendation would be, like what we do for our clients at Three Edge, is to have a considerable hedge or allocation portfolios in hard assets. So that's one thing. Secondly, rising hard asset prices, like what we're seeing in 2024, is typically a leading indicator for inflation. So while so many people are complacent in saying inflation is just going straight down to the 2% level, hard assets would be a signal of saying, well, wait a minute, that might not really be true. We might still be in this. Now, I want to point out, going back to the Seasons of the Market chart, which I keep finding very helpful, our research would put us in summer, in fact, in late summer. And that's very consistent with hard assets doing well and bonds doing poorly. Further corroboration. But just keep in mind that while we're in summer, and we could stay in summer for quite a while, and this could be a nice run for hard assets, it could extend for quite a period. At some point, if the Fed is forced to hold rates longer than people expect, or in fact, if they're even forced to raise rates because inflation does come back, then we could enter that next phase, the credit contraction. And that could hurt all asset classes with the exception of short-term treasuries. So we think the best hedge against an equity downturn, or the best complement to your equity portfolio, would be a combination of hard assets and short-term treasuries.
Excellent. Great. Thank you for your insight into this recent rally across the commodities complex. And I do agree with you that the discussion seems to point out the fact that we believe when it comes to investing over the long term, investors would be well served by thinking beyond just stocks and bonds when it comes to their portfolios. So that will do it for Steve and me for this week. Eric Bielizen and I will be here next week for our June edition of the Three Edge View from the Edge, where Eric will provide our most recent outlook for the global capital markets as we approach the midpoint of 2024. As a reminder, all our videos are always available on our Three Edge YouTube channel. And if you know someone you think might benefit or enjoy these weekly videos, please feel free to share them. So until next time, on behalf of Steve and everyone here at Three Edge, thanks for listening.